Hey, yo, what's up, everybody? What's going on, folks? Happy Fed Day. Welcome to the True Trading Group live stream. We got it, 75 basis point hike from Mr. Powell and company. What does that mean here for the markets? We got a little bit of a relief rally. Is that the end of the stock market crash? Is it that simple? Did Jerome Powell and the Fed just save us? We're going to give you that answer here today on this live stream. My name is Michael Edward, and I've been trading and investing for over 15 years, folks. Began my career working at a fund in New York City. My first job right out of college. Then 2008 happened, and that was the Great Recession and the stock market crash. But also the same year received one of the firm's Trader of the Year awards. 15 years later, I'm now the co-founder and head trader at True Trading Group, the fastest growing and highest rated educational platform that is available to the retail trader and investor today. And since 2016, my team of 8 other professional traders, along with myself, have helped thousands of people from all over the world, from all walks of life, achieve their financial goals. If you guys are ready to learn, trade, and profit for real, you've come to the place. Take a moment, smash that like button, turn on your notifications, subscribe to the channel. All right, share this stream on your own social media. Let's reach out, educate, and empower as many retail traders as we possibly can. And folks, I come on here day in, day out, night after night, and I explain to you guys that no matter what's going on in the market, there's opportunities. And in True Trading Group, we're going to teach you how to find these opportunities and how to profit from them, with us doing a lot of the heavy lifting for you. We provide you guys with analysis. We provide you guys with market commentary. We provide you guys with trade ideas, along with all of our own trade alerts in real time. You know, a lot of people called me an idiot just a couple of weeks ago when I told them I still did not think that the bottom was in, that I still believed the markets were going lower. The SPY was at 415. I said, nope, I still do not believe that the bottom is in. And a lot of people called me foolish for that. Now we look back as the market has just made fresh new session lows just literally yesterday. Okay. It now seems that I was right with that call. But is it because I'm smarter than you? Is it because I'm better than you? Is it because I have more information than you? No, no, and no. I am just simply have received a real education, have 15 years of experience. I learned during 2008, which was the worst financial crisis and stock market crash and recession that anyone that's alive watching this live stream today has ever experienced. But I didn't just survive that environment. I thrived, receiving one of the firm's Trader of the Year awards. That's the difference. We don't flip-flop in True Trading Group. When I come on here day in, day out, I give you guys exactly what I think the markets are going to do. I tell you exactly what I believe individual stocks are going to do. We're not Monday morning quarterbacks. I don't flip-flop back and forth. I stand behind my analysis. After my 15 years of experience in education, I confidently stand behind that. And that is exactly what you guys get here inside True Trading Group. You know, a lot of people crapped their pants when the markets were crashing last week. A lot of people were coming into today's Fed meeting and not understanding, well, the Fed raises rates. Is that bad? Is that good? Right? But we are capitalizing on this volatility, and this volatility in the market is creating the best trading environment that I have ever seen. The opportunities that are out there on a daily basis, guys, is just nothing short of incredible. The opportunities out there to day trade and swing trade this market is phenomenal. But then also the opportunity that exists out there for you guys to be able to start averaging into some fantastic companies that you believe and that I believe are going to be able to build wealth for myself, my family, for many, many years to come. And that is exactly what I'm teaching all of our members inside of True Trading Group to do. Okay, there's never been a better time to get involved. You don't want to get involved in the markets at all-time highs. You want to get involved when the markets are down. Buy low, sell high, right? That's what everybody says. If you're sitting on the sidelines right now, plain and simple, you are wrong and you are missing out. Now, guys, today's live stream is going to go down a little bit differently, okay? We're going to go down a little bit differently here today. I got a fantastic live stream in store for you guys here today. In a minute, I'm bringing on 2 very big guests. I've got Matt Kohrs and a former Deutsche Bank market maker for Matt and I to interview for you all here live. And of course, we're going to be talking about the Fed rate hike and the overall markets. And we're going to open things up with a Q&A session for everybody to be able to ask questions or whatever it is that's on your guys' mind. Okay. So without any further ado, everybody, please welcome Mr. Matt Kohrs. Anytime, bring him on. Adam, you got to bring on Matt. There he is.
Hey, what's going on? What's going on, TTG fam? Happy to be here. Hope everyone survived the FOMC day. Craziness.
Yes.
Craziness.
What's up, man? I'm happy to have you here, bro. I missed you.
Dude, it's been a minute, but I'm just happy we have this volatility and this movement and everything going on. And honestly, even though today was crazy, I thought it was going to be more crazy. Like, I really thought we were going to get an absurd trend to the upside or the downside, and we got some movement, but it was a little bit choppy.
Yeah.
I thought today was going to be more nuts, and I was listening to you just there a little bit of how, like, I was talking about that too. Guys, we haven't seen the 2022 low, and everyone's like, I don't know. And I'm like, I don't know. You see where oil's at? You see where yields are at? Like, team, like, you gotta pay attention. But I'm excited for this conversation tonight. I myself have not been able to speak with a market maker, so I think we're gonna have a great conversation and be able to ask some good questions. So not only the TTG, but everyone who just came over from the Moon Gang stream. I mean, let's learn a bit. Let's learn a little bit more about market structure. I think this should be fun.
Awesome. I love it. Well, without any further ado, let's dive right in. I want to bring on everybody, give a huge, warm, gigantic TTG welcome to Mr. Chris G. Everybody welcome Chris.
What's up, guys?
There he is. There's my guy.
What's happening?
How you doing, man?
Doing good. How are you?
I'm doing well, buddy. I'm doing well. Just another crazy day here in the overall markets. Market. Listen, we got pretty much what we expected here today on the SPY, but we're going to get into that. We're going to get into that in just a little bit. What I think might be best here, Chris, for us to kind of start things off is maybe just give us a little bit of background on yourself, like just a kind of quick summary of kind of how you got into the markets and kind of some of the positions that you've held and what is a market maker and what are some of the other positions that you've held throughout your trading career?
Sure, no problem. I started back in 97 as a retail broker. I actually almost wound up working for Stratton Oakmont.
No way! That's incredible.
But no, I didn't go there. I went to another place that was doing the right thing.
Right.
And after the broker, situation, I kind of got bored, and I wanted to understand the mechanics of how the market worked, et cetera, et cetera. And then I went to another company, and I was a retail trader on an agency desk back in the late 90s, early 2000s. They would have a pay for order flow sort of payment.
Mm-hmm.
So people would, we would clear for 1,500 banks. We would have take in all their order flow, execute them, and we would get a percentage of that. After that, I started doing. I dabbled in a little market making in penny stocks.
Okay,
that was fun.
I can imagine.
So I sort of, I've been around the block for a while, and the technology has definitely changed from when I was a retail trader. But we also traded in fractions. So this decimal stuff,
right?
Fractions was fun. We had a lot of. I'm sorry, I'm just looking at the market.
Too young for the fractions.
The fractions are great.
Matt and I missed that.
Yeah, well, the banks I worked at were I worked at Pershing, which was a subsidiary of DLJ.
Okay.
And they did a lot of clearing for about maybe 1,500 banks. So we would, trade their order flow. Trading back then was a lot different, especially as a market maker, because, everything right now is automated. So we didn't have a lot of automation back then. We actually saw a lot of the order flow coming in. So if the market was, trending up, you get a lot of buy orders. If you were a technical trader / market maker, you would see where the resistance and the supports were. So if you had a a 500,000 share order on the buy side, you'd go out there, you'd buy, maybe half of it for the customer, execute them, and then, take the other side on the other, half and get short the stock. So, there's a lot of, I don't want to call it manipulation, but there's a lot of different ways from a market maker's perspective back then, on how to make money. Now, I wouldn't be able to tell you how it is now. I'm sure it's all automated. So I don't think they do a lot of the things they've done back then now because of the automation.
What is for a lot of people, market maker is a term that gets thrown around a lot. A lot of people on social media, but without really understanding what a market maker actually is and what's their job. What is a market maker's mandate? What is a market maker supposed to do?
Make markets make an orderly market, be ready to buy and sell and make a market for your customer. Depending on depending on what sector you trade. I was always in technology. But if you were, biotech or healthcare, whatever, you made markets in those stocks. And if, the sales traders on the market making side, we always used to say you're as good as your sales trader, right? Because they have sales traders that have the relationships with the banks, with the big funds to get the orders. Once they get that order, then they send it through the system, and now it appears on your desk.
So that sales trader really is kind of what gets you the information you need to kind of have an edge.
Pretty much.
Okay.
They can also, in a nice way of saying it, they could also do the opposite of that. Because there are a lot of times where back in early 2000, we had this thing called program trading, which was sort of automation. Now it's all algos and stuff. But program trading, as an example, if we were long a stock, I know we trade a lot of technology, so I'm just trying to think of AMD. We traded all that stuff. Yeah. So if we had a position in, let's say, AMD, a proprietary position that has nothing to do with the street, we would have a position. So as an example, if we had, we're long 50, 100, 200, whatever it was, 1,000,
right.
Sales traders would come in and they would have a relationship with, let's say, Morgan Stanley. And they would say, okay, hey, AMAT, what do they call you by the stuff? 50 out here, okay? Meaning they want to buy 50,000. So 50 out means I'm selling them 50,000.
Got it.
But that position isn't for the street. That position was proprietary. So when program trading started to come in, we kind of got screwed with that because they would kind of ask you, but they would just do it. They would print you. They would print it, an eighth to, a quarter below the bid, let's say, and you get hurt. So market makers, if you didn't have a technical background and you were just trading order flow, towards the end of the market maker, era, you can get hurt very, very badly. I still see some of the market maker mentality in some of the options that I trade, like the SPYs. You could see how they, they're on one side and then they're on the other side, and then, they're protecting themselves and hedging themselves. But individual equity stocks, I don't really think there's that much of, if you want to call it, manipulation going on. Yeah. It's kind of hard to do that.
Yeah.
Because everything is all, it's all automated.
If I could interject here. So
sure.
It sounds like when you were doing your career as like a market maker and kind of going through this, it sounds like there was a big phase switch, maybe around like, I don't know, 2005 when the markets went digital or something around there. But like right now, to my understanding, and I was by no means trading back then, it sounds like there were liquidity issues and we had massive spreads and people couldn't necessarily get easily in and out. And that was the rise of market makers, people willing to take on the risk of that and make the liquidity better. And for anyone listening, liquidity it's always a good thing. You want liquidity. So when we got to this new age of, I think in the like early 2000s, pretty much the rise of Citadel and Virtu, what was the big difference there? Because you were alluding to it a little bit of it became automated and it became algorithmic opposed to like someone picking up the phone, doing this and doing that. What was the big shift there? And like, what do you think that's actually done to the markets?
My opinion, I think it it took away for me, it took away and I'm sure for a lot of other people that were doing what I was doing, I think it took the fun, if you will, away, because you really weren't utilized as much as you were. You became sort of replaced with an algo. You know what I mean? Yeah, algos are great, but algos aren't that great. You know what I mean?
Yeah.
The technology has evolved tremendously, as you know. I think it's a good thing because I think it gives everyone the opportunity to be a part, right, of the market. But I think the market makers had gotten a bad rap, and not all market makers were in that area. The
That makes
banks,
sense.
the banks, we had, one thing I'll say is the budgets for technology in the banks is, there's no cap. I mean, they have no problem throwing, $750 billion a year on a technology budget to get what they need to get done. And I think that, when back in 2005, 4, the technology started to come around. It definitely had gotten a lot better in 2009, 2008, but unfortunately in 2008 and 2009, we had the financial crisis. So, and unfortunately, Bear Stearns, and I knew a lot of folks that worked there, and Lehman as well. They went out of business, and I think that also put a bigger strain on the business, on the risk side, which probably caused them to go full force with technology.
Yeah.
Everyone has a different story. It's market making was a lot different back then, than what it is now.
I find that to be so interesting. So it sounds like back then there were many, many different firms who were kind of in competition with each other, trying to do, honestly, as a
100%.
business, the best market making. And right now, I'm not sure like how much you've been paying attention to it, but the recent statements from Gary Gensler are basically, we should look at payment for order flow because it's being controlled by the duopoly of Citadel and Virtu. Those are the two players that dominate over 80%. So it sounds like within 2 decades, we've gone from a world of competition among many to really Citadel, and then it seems like they keep Virtu along just so they never get hit for like monopolistic practices. And that's the exact thing being discussed, is like there have to be conflicts of interest. Like literally the chairman of the SEC has been saying that. So do you think that deviation from how you knew market making to the phase that we're in now, like, was it technology? Maybe did Citadel just hit the ground running the fastest at first, and right now it just got to where we are? Because I mean, he's making billions and billions. Like with the rise of the retail revolution last year in 2021, it made him billions of dollars. He reported the highest profits he's ever had. I mean, it just came out. He's buying property in Miami. The property alone is $375 million. Like that's just his property. Like, dude, did you know how many portions of a penny you have to shave off to pull that shit off? And like, they're like, no, I'm not a monopoly. I'm making things better. It's like, it's stamping out competition.
No, it is. It's, I know a few folks that, when I was a market maker, that actually covered Citadel. let's just say they had zero budget for technology. There was no cap.
Oh, wow.
They wanted to be where they are now.
I guess
Just like Soros Fund, all of these big hedge funds that that automate everything. Everything's automated. You kind of just, I think they kind of just hire people to sit there and just like crunch numbers and more on the technology side than actually have a an opinion about the market. You know what I mean?
Yeah.
They don't need that. They build the AIs. They build all of these things that have incredible speed. Like fast.
So, like the high frequency, the rise of like high frequency trading. It's like you've gotta, and I guess that fell right in line with decimals. Like there's so many more transactions being taken place at different prices. When it was fractional trading, it was a much different. The speed of the price movement was far different because you had a far fewer price points that stock could be traded at. And I feel like that's when like everything really kind of changed. I've got another kind of you were alluding to something there with like algos and when things became automated, like maybe it's easier to kind of control risk on like when you have like a computer and something that's automated. I'm curious, like when it comes to market makers and whether it was like, when you were doing it or if there's maybe any input on what you think kind of takes place now, but like when it comes to like these huge short squeezes that people see, like how do market makers deal with a short squeeze and like what role do market makers play? Like, are they the ones getting squeezed because they take the opposite side of the flow? Like, how does that work from the side of a market maker? Can you talk about that maybe for a little bit?
I would tell you that you will never squeeze a market maker.
I love that.
Market makers, they don't get squeezed. It's if you're at a smaller firm, yeah, you'll probably get a tap on the shoulder, like kind of bring it in.
Yeah.
But for the most part, they know exactly what they're doing. They're not just sitting there and throwing darts at a board.
Yeah.
They have concrete evidence, information, or how their sales team, that's also, you have to understand, it's not just a market maker. It's not just market makers in a room trading stocks. It's one place I worked with, we had almost 600 people on one floor.
Wow.
And that's divvied up between equity, derivatives, sales, you know what I mean? Special situations, just, 600 people just sitting there and very, very smart people. And, they have their meetings and, they figure out what they're going to, it's all about, how many players are out there, who's getting who is correct most of the time, right?
Right.
And you got a lot of hedge funds out there that, even if they might be wrong, for 2 weeks, for a month, for 2 months, for 3 months, but guess what? They could be wrong for a year.
Right.
You know what I mean? And that's just that's the way it was. The way it is now, I can't talk about that because I don't know, but I can only imagine that it's it's obviously a lot different. I'm sure there's a lot more things in place for risk, but I think it's all also all driven by computers, algos, whatever you want to call it,
Yeah.
black boxes, et cetera, et cetera. But yeah, it's
really interesting to
very
hear that
different.
because like with that transition of, I guess, like let's say algorithms and like one now instead of a team of people doing it, you have one tech guy overlooking it, making sure it's run. And obviously they have their risk tolerance built in and they're very, very good at balancing it out. Like, oh, we sold all this, so let's go get these calls. And they're always balancing. They're balancing it with options, they're balancing it with their stock. But to even see that go wild to the point of it becomes an issue at the DTCC when retail brokerages get locked up, like even as smart as they are, to still get it wrong. And it doesn't happen often, like by any means, but it's still
Right.
the point that it happens. I mean, more recently, you had nickel blowing up at the LME. Like, that's stuff that should never happen. And like, now that exchange is going to be done because they were busting all their trades for a week after, saying, nope, doesn't exist, not real. Like, your trades are gone. It's like, algorithms went wrong, but then also the interaction between, I'm assuming, the brokers sending their orders, and I believe the U.S. component handling those nickel trades was JP Morgan. Like, there's some dark shit that happens in this world where JP's calling up the exchange and saying you have to bust those trades. Like, and then they're like, it's in our fine line. Like, hey, if you want to sue us, you can. And then they did. So Chain Street says, okay, we'll sue you then.
It's also that, you got a lot of old timers that have been around the block for a long time, right? And they've been on Wall Street, and they're in a new technological era, if you will. They're also in a totally different world, if you really think about it. Right now, good news is bad and bad news is good. You can't make a decision when you can't. It's just, there's no long-term, day trading. Not for me anyway, but these banks and these market makers, they know what they're doing. But what I will say is that, I think a lot of people who were in the business or who are in the business for a very long time, my opinion, they're in a playing field where they shouldn't be, because things have changed. You know what I mean? You can't call people on the phone anymore, and you can't, trading back then was like, you would call somebody, you call your buddy at, Merrill Lynch.
Right.
I got 50 over here to go. Find me a buyer. That's the way it was back then. It was all done by phone. That's how relationships started. That's how relationships grew. You'd get a phone call, hey, I got, 500 to buy, $1 million for sale, work it, VWAP, this, that, and the other thing. And then that's how that was done, prior to all this technology. Hell, when I was a market maker at one firm, when we were trading bulletin boards and pink sheets, I had to go to a book to look at the bid, a printed book. Yeah, I had to go on a book and look at and say, okay, this is the bid. Yeah, and it comes out once a week.
That's crazy.
Yeah.
And now they have natural language processing for like the SEP coming out with the Fed, and they know it within nanoseconds. That just shows how wild.
Think about that. Give me a bid on so and so. Oh, hold on a second. Let me look at something that was printed 3 days ago.
Wow,
right?
That's insane.
Yeah. But that's the way it was. It would, and even before I started, I have a lot of family members that were in the business. That's how it was. You got on the phone, you looked at the market, you had conversations with people. You know what I mean? That's how relationships, like I said, started. That's how Wall Street, and then you had people who were not doing the right thing.
Yeah.
They took advantage of it. The SEC came in and they put a stop to phone calls, and they automated this, and this had to be timestamped because, trades were being timestamped, a day later, for people who were doing the wrong thing. But
yeah,
definitely.
I have a follow-on question to kind of the short squeeze stuff. Like, how much does would a market maker of their decision to actually short a stock, how much of that is just seeing the order flow that's coming in from some of the bigger clients, or knowing what's out there, like knowing that you're always going to have the liquidity of being able to cover that position? Like, is that, or do you just look at something and say, oh, you know what, this thing's overvalued? Or is it more like see the order flow and then get short? Like, how much of the
That's a great question. Two types. One, there's a market maker that just trades and we had plenty of them. I was fortunate enough to learn from who I still talk to this day, who I think is the most absolute incredible, like just because he mentored me and he's a good friend of mine now, but he was the guy who everyone flocked to when when things didn't go right for them. Let's just say that, right? So there's two types of people. There's market makers that are very, very good just trading order flow, like really good. And then there's a market maker that can trade order flow, that really doesn't want to deal with the order flow, that hands it off to their assistants and trades the technicals. Right? I was fortunate enough to be taught by someone who was that, who traded technicals. So, you know, that has a lot to do with, you know, your question, you know, a lot of order flow had a lot to do with it.
Yeah.
But unfortunately, I think as the market started to progress and there was more information out there for everyone to see, I think that group of people, if you will, you know, just started dwindling because you can't survive, because order flow, right? Order flow is good when you have it, right? What happens when in the summertime when, you know, you don't have order flow? You know, I mean, how many White Castle competitions can you have on the trading floor? Seriously. There's just, you know, there's so many things, you know, that you have to take into consideration, and that's one of them. So if order flow dries up, then the market maker that's really good at trading order flow, what are they doing?
Right.
They're not putting any value into anything.
Yeah.
You know, so I always tend to, you know, flock to the market makers and the group of people that actually sat there and, you know, looked at, you know, support, resistance, and, you know, Bollinger Bands was a big thing for us back then. You know, VWAP, et cetera, but yeah, you know, trading order flow can hurt you and can make you a lot of money, but I think at net can hurt you.
Yeah. Yeah, I think being well-rounded, just kind of like in any aspect of trading, I feel like being well-rounded is always going to put you in a better position to succeed through the various environments, you know, and not being like the one-trick pony that I talk to a lot of people about on these live streams. Matt, do you have anything else? Any other questions that you wanted to run by Chris?
Yeah, I wanted to try one thing out, and maybe like you can't come to this. It's probably more of a recent question, but. Could you maybe, and this is getting really technical, so speaking about order flow, there are things where there's an insane fervor, GameStop, AMC, Doge, SIBA. How does it work structurally in this right now when everyone was sitting there on the pandemic and they're trading on Robinhood and all the order flow is payment for order flow, so it's going straight to Citadel. We know that from the government hearings, but like an example of that, when there's such an imbalance on one side and everyone's sitting there during the pandemic, buy.
We love that.
Well, I'm sure you do. How does it work when, like, in-house, there's nothing on the book? Like, when there's so much of an imbalance and it's not bouncing back and forth. So if every retail is sending in a buy and then eventually market maker, whatever, we'll call it M, runs out of it on their book, how do they keep fulfilling it in the way when we still have payment for order flow? How do they fulfill those orders? Because I'm there on Robinhood and I'm getting a fill within a second. So where do those shares actually come from when the book is now empty?
Proprietary accounts.
I guess, could you dive into that? I mean,
Sure.
I don't know. I mean,
You know, you have GameStop. You know, if everything's going to Citadel and all they see is buy orders from, they look at their top of the book, they see their most current buy order to their lowest bid, right? They see that there's no one selling it. Everyone's buying it. So they have two options. They could short the stock, which means they could fill your buy order, right? And let's say you had, example, 100 shares to buy at, you know, I'm making up a number, $20. They can just execute that order automatically, and they'll be short, right? The other side, they're not going out and buying that stock for you. They certainly don't have a position in that stock. Some of them did, and they got hurt, right? But when you're getting executions like that, that's automatic. They're not deciding whether to buy or sell it. They're probably saying buy everything up to this, sell everything up to that.
Yeah.
You know what I mean? And when you run out, when it's one sided, when it's all buys and no sells, market maker. I'm not calling Citadel a market maker because they're not a market maker, right? But as a market
Citadel
maker,
Securities is. Citadel the hedge fund isn't, but
yeah, I
securities.
know they're not market makers. They don't work for a retail. It's not a market makers are. Citadel is a hedge fund, right? Citadel's a hedge fund. That's the buy side. That's not a market maker.
I thought Citadel Securities was the world's largest market maker.
They're not a market maker. The Citadel, from what I understand, from I'm talking about from when I was a market maker, Citadel we called them a buy side. That was a hedge fund.
Yeah, so like
Right,
almost
so
a client, like you would be dealing with them.
Right, but now I see that they do have a market maker acronym, right? CITL or something like that in the box. You can see them. So they're probably making markets now. But when I'm talking about when I was a market maker, they didn't make markets. They gave us orders. They gave the market. They got all the orders from whoever, and then they sent them out to market makers to execute them. So, but market makers like that. They like when if they see a one-sided market and they're a technical trader, you can make a lot of money.
Well, if it's one side like that and you run out of your book and then you said you could short it to them. So at the end of the day, you end up becoming net short. How does that get balanced out? Like, how do you go from being net short to bringing yourself back neutral as a market maker?
You gotta, as a market maker?
Yeah.
Well,
or
first
how
of all,
do you locate the shares that you even shorted to them?
Oh, well, that's honestly, that is, first of all, a market maker cannot short on a downtick.
On a
So
downtick.
right?
Isn't like the SSR rule of like if the stock, like the dog pile effect?
Market makers cannot short on a downtick. They have to wait for an uptick.
Okay.
Makes no sense, but whatever. So stocks bid $32. The last tick was down. They got to wait till 32.01 to actually get short. But that's hitting the bid short. You could sell on the offer, right? Market maker has the option to buy and sell on the bid on the offer. I can use my acronym on the bid to buy as I get hit. I can use my acronym on the offer to sell if I get lifted. But I can also hit the bids and lift the offers. So we market makers have, literally two ways to buy and sell.
Yeah, you can play both sides of the spread.
Right.
Yeah.
So, that's another thing that I don't think a lot of people understand. But, to answer your question, where do they locate the shares? That's something that the back office has to handle.
Are they just naked? I mean,
well, I knew you're gonna ask that.
You knew that was coming, Chris.
In my experience, I never had any issue shorting stock. Whether the firm was naked or not me. Whether the firm was naked, I wouldn't even know that. I honestly, I wouldn't know that. Does it happen? I'm sure it does.
Yeah.
I'm sure it does.
The trader's not the trader.
Yeah, we're not going to sit there and say, "Hey, could we short this? Do we have stock?"
You're executing the order flow. It's the back office and compliance's job to make sure that you're within risk parameters. But
exactly,
they're naked, and then they'll probably have you flow order through the next day to try to get back to neutral or something.
Exactly. Exactly.
So,
but that really never happened. You'll get someone from the back office tapping you on the shoulder and saying we have an error, and you just say, just put it in the error account.
Yeah. Right. Not now.
Not now. Just put it in the error account.
Awesome.
But as far as naked or not, the back office would, they should really know that the market maker is not going to know that.
Yeah. Everything's happening too quickly for them to kind of know that. Chris, man, I got to tell you, bro, I really, really appreciate you coming on here and spending some time with. There's so many people on this live stream. I know Matt, Moon Gang, we have a lot of Moon Gang that are on the live stream right now. Moon Gang, what's up? Well, welcome. Glad to have you all here. A lot of the TGG fam are all here, super excited, and we're really interested to kind of get some insight from someone with as much experience as you have. And I really appreciate you coming on here. But
no problem.
Do you mind me asking, what is it that you do now? You said you were a market maker previously. What is it that you do now?
I trade with TTG.
My man, Chris, my man.
Yes.
I got some follow-up. So you're a full-time trader now with the TTG fam.
Yeah.
Exactly. I love it. I got some follow-up questions for you, man. With so much experience, right? Someone like yourself that's traded professionally, market maker at all these different firms. Why did you sign up for True Trading Group?
I had two avenues to go down. Right? Keep losing money or get a real education and understand what I have been doing is wrong and why. And that's the honest truth. I think I joined last February, and I was like, let me, and I looked at all these, other companies. I just didn't, listen, I could smell a artist, down the block, no problem. But, and I just started listening and taking the courses. And listen, I wasn't making money right away when I joined TTG. I was still making stupid mistakes. But the education, lays the groundwork.
Mm-hmm.
With that market maker mentality, it was very difficult for me to like sit on my hands and not
I think I gotta, there's a lot of people on this live stream that maybe don't really understand the tremendous difference between market making and then trading individually for yourself. It is night and day. So there's a lot of people that are on here that are that I see some comments of people like, wait a second, like if you had, was a market maker and had all this experience, and like why was their struggles trading for yourself as a retail trader? They have no idea how different market making is compared to day trading and swing trading for yourself. So you guys have to understand that there's a tremendous difference between market making when you're handling order flow, when you're trading for a bank, and you're receiving order flow from banks and you're executing those orders and you're maintaining an orderly market and taking the opposite side of trades. And it's, yes, you're still buying and selling stocks, but you're doing totally different things in that process. So I want to just clarify that for a lot of people on here, that when you're a market maker working for a firm, and then if you decide, hey, I'm not going to market make anymore, I'm just going to go and day trade, you're still trading stocks, but you're doing something totally different. So I just want to make sure that I clarify that, just for a lot of people that might be on here that maybe didn't understand the connection there. But going back to, like you said, like with the education and everything, like how is it? How is the education and how's the platform in True Trading Group? And how
I love it. I do. I love it. And, I look at it like this, if you're going to, it's $1,000, whatever it is. I think when I joined, it was like maybe $1,500 for the year, whatever it was. And I started doing the courses and stuff. And I think I did that in like February. And then in April, I said, F this. I'm doing this lifetime, because this is, first of all, it's what I do for a living. You know what I mean? So you invest in, this is my business. right? You invest in your business. It's as simple as that, you know. And just to add another thing to what you said, you know, a lot of people are probably questioning, well, it's not that. Why would it be difficult for you to go from a market maker to being a day trader? It should be a lot easier. Well, no. Market maker, you get a really, depending on how good you are, you know, you can make a mid 6-figure salary with, you know, 40, 50, 60, sometimes 80% bonus. Take that away. Right.
Yep.
Take that big cushion away.
Exactly.
Now no one, there's no one paying you but you.
Exactly.
So now your whole the whole psych behind it is like, I gotta make money. I gotta make money. I gotta make money. I gotta make money, because no one's paying you. So there's that, and there's the, you know, the whole mindset of in and out. Market making, we'd have positions, you know, for weeks or months or whatever it is. You know, this is totally different. I lost a lot of money.
Yeah.
I'll be honest, a lot. Probably. I hope my wife is there. It's a lot of money.
It's a lot of money. It's a lot. It was a big number. That's fine. That's fine. But
well, you know what? I'm whole now. It's great. And you know, all of the classes that I took, and like, I think I hitched up about a few months ago, and I was like, yo, it just clicked. It just clicked. I found myself, like, you know, I'm like, whoa, you know, works for me.
Awesome, man.
You know,
Love it.
you got to just find your way. There's no book to tell you. It's, here's what you do to get from here. You know, with my experience and from what I'm learning, from my experience as a market maker, from what I've learned from TTG, from what I continue to learn on a daily basis, that's what, you know, all of those things put together, you know, that's what makes an individual, you know, very good at what they do.
Awesome, man.
No one's gonna tell you what to do. You got to just critique it to your own. You know, if I tell you some of the trades I put on, you'd be like, "What, are you crazy?" It's just how I am. I need action. You know, I need the action. But
I love it, man.
classes are great, and I love it. And I learn every day. Listen, I make mistakes. I'm not.
Everybody does.
No way the smartest man in the room. I'm going to tell you that.
We all make mistakes.
We all make mistakes. We're human.
I think it's really important for everyone to just, you know, to always realize, always understand that no matter how much experience you have, no matter how good you get, you always will forever be a student of the market, and you never stop learning. And the day that you think you figured it all out is the day it will humble you, and the market will humble you quickly. I've been there. It's happened to me many times. You know, and it will continue to happen throughout the rest of my career. It's all about being disciplined and always, you know, never getting yourself too far ahead, and just staying grounded. So, Chris, I want to thank you, man, for coming on here and spending some time with us. You know, I know you and I, you know, spoke before, and it was just great having you come on here and to give your perspective and give your insight on market making and how it works and answering, and, you know, how the industry's changed. You know, so I really want to thank you for coming on here. I think it was really beneficial for a lot of the viewers on here, Moon Gang, TG fam alike. I think it gave them, you know, some insight into the world of market making and how the industry has changed. So I want to thank you so much, man. I appreciate you coming on here. I'm super happy to hear about your recent success. You know, and it's nice to finally have someone on here with a similar accent to myself. Adam makes fun of it all the time. So,
oh boy,
Everybody give a huge thank you to my boy Chris. Everybody.
Thank you.
Chris,
Hey,
again,
Chris.
Man, thanks a lot for coming on, bro. I really appreciate it.
No problem, Mike. Anytime. Take care, Matt.
Brother.
Thank you.
All
Good
right,
luck,
brother.
man.
Thank
Oh man, so Matt, that was interesting, man. That was, we kind of got like some insight into, like market making, but like kind of old school style, and it seems like things have really changed a lot. From his time as a market maker to now with like automation and everything. But I feel like you knew I was going to ask about the naked shorting.
Oh yeah, of course.
I had to throw that in there. We
Yeah.
have to hit him on that one. But
well, not even just the automation, like so many of the regulations have changed. So like I'm sure there are things that went down back then that like you could do now, you can't do now, like and just the change of it, the size. But it reminds me of, have you ever read the book Flash Boys about like the first people? Well, it was about how IEX was made. And they made it because they figured, it's about like the rise of high frequency traders. And some guy noticed that like whenever he was executing trades for like a large position, he always got to feel like slightly where he off in a negative way or where he went. And then he started looking into it and he heard about high frequency traders. And it was just about him like researching this. And that's how IEX was born. It was born, their orders have a 200 millisecond speed bump in it. So everyone's late. So it takes away the advantage of high frequency traders. That's literally all it has to do, which is like 200 millis. It takes us longer to hit the mouse button. And that's how fast high frequency traders are. Like that's so insane. It's not trading. It's not taking on risk of like long and short and listening to this. They're purely looking at orders coming in and out, and they're trying to race everyone else. It's a hardware issue. It's like, how fast can you be against other robots? It's not actual trading. And the last time I checked, it's about 70% of trades are now high frequency traders, which is just like, what are we doing? Like, it's great.
That's why, it's, we're never going to be faster than computers, You're never going to be faster than a computer. And, we have another thing stacked against us, which is psychology and emotions, right? And it's like, that's why like every single thing that I do in my trading and that I try to teach all of our teaching members, which obviously, Matt, but I always focus on like the psychological aspect of trading and the mental part, and every single thing I do in my trading is to try to be as robotic as I possibly can, because like when a computer has an order, like, they've got their triggers and the computer doesn't do anything until those triggers are reached. The computer doesn't say, oh, that's a big red candle. That doesn't look so good. Maybe I should get out now. Or, oh, I'm up this much money. Maybe I should just get out now. It's better than nothing as a stock pool. Like computers don't do that. Computers, oh, this is the one. This is going to be the one. Let me go bigger on this one. Computers don't do that. That's the human element. And that's where we've got to do our best to kind of get that under control. So what I want to shift gears here, Matt. We got, in case people didn't know, we got a major event happen today, and that was the Fed meeting. Okay. In case you guys have been living under a rock, or maybe this is your first live stream ever involving the stock market, we had a major event today, and that was the Fed. Okay. So we're talking, Matt and I, we're going to be talking the Fed, rate hikes, recession, over our markets, and everything else. So I want to move things over to today. We got a 75 basis point hike from the Federal Reserve on the Fed funds rate, which brings us up to 1.5 to 1.75. It's essentially around 1.6. And that was kind of what the markets were expecting coming into today. I told people on our YouTube channel here on Friday's live stream, after CPI data was so bad, we had told people that you probably get now a 75 basis point hike on a Wednesday. And sure enough, as time went on, Monday, then Tuesday, it was 100% baked in. It was like a 93% probability that we were going to get a 75% rate hike today in the Fed futures market. So we got it, and the Fed gave it to us, and I think it's the right move. So I want to kind of maybe just get your input on today's rate hike, and kind of what your thoughts are. You think it's the right move? Should they have done more? Should they have done less? Like, what are kind of your thoughts on the 75 that we got today?
So for people who haven't been following it that much, like literally up until Thursday of last week, it was 100% a 50 bips rate increase. it was up till Thursday, and then we got the CPI data on Friday. Like if you looked at all the estimations, and even that, the last one around, they asked him at the conference and for the last FOMC meeting, they're like, "Are you considering 75?" He's like, "It's not on the table. We haven't talked about it. It's not on the table." Like he brushed it off as like it was fucking insane to even.
And the market rallied that day.
Yeah, it was crazy. They're like, "Nope, it's just like all we're doing is 50, and we're just going to keep doing 50s." And that was literally true up until Friday. And then we got the CPI, and for just a recap very quickly, that came in at 8.6. And the estimation was 8.3, which is very high, but it came in even hotter. And then that changed everything. And then throughout the week, Monday was one thing, then Tuesday, and then as of today, early this morning when the market was dipping, there was actually a 5% chance of 100 bips. Like that was starting to rise on the estimation. I was like, where are we going with this?
Yeah.
So everyone pretty much knew, at least as of today, when the people were checking, it was going to be 75. And I don't know. Like, I just feel like we've always gotten at this of like the thing that we're told is not going to happen next because it's too hawkish is the exact thing that happens next. Like, that's how it's always gone. Just 25, they're like, we're not going to do 50. Then we got a 50, and they're like, we're not going to do 75. All right, we're going to do, like, it just keeps going up and up. But that makes sense because inflation keeps going up and up. They're not tampering it in any way. So I view it in this scenario of we're swallowing a painful pill to hopefully stop the disease. The painful pill is how bad is inflation? Because if they hit us with a very hawkish number, the higher the number is, it's considered to be more hawkish. The market's going to take a hit, but the concept is to make the future pain less. We're taking a painful pill now to fight a future disease, which could potentially be named stagflation. So I don't know. I guess like hindsight bias is 2020. I think they should have stopped it this time last year and hit us with a series of quarter, like just 0.25s. But hindsight bias is 20. It doesn't matter. It's more of like what could possibly be done now. And the thing that concerns me is I know we have the cushion in the economy of the magnitude of money saved is the highest it's pretty much ever been. But things are shifting where mortgage rates, I believe since December, are up 4%. They rapidly jumped up to 5.8, which is a huge number. So the average person is probably getting 6.2, 6.5. You're having debt go up over the past 2 years. And now the savings rate, not the magnitude, the rate is plummeting, and we're at the same level as 2009. And we might be going to 2008. So there's other things that like, it's a race against time, it feels. It's like, I get we have that cushion, but are we eating away at that cushion? And hey, all of a sudden, if the next 1, 2, 3 readings, all of a sudden we come down, I think things will be fine. And the cushion was enough. But if the next one comes in and we're still cruising at consensus of whatever, 8.3, 8.4, 8.5, and if we get the next one at that, it's a race against time. And we'll see how they do it. And I don't know. I think if we got a 1 today, folks, just so you know, the SPY would have plummeted. If they came in and out of nowhere and Jerome Powell's like, hey, we're fighting it, I think people oddly would have respected him more and be like, all right, you're taking a page out of Volcker's book. And Volcker's the guy who saved us from the early 80s, like when he jacked up rates, be like numbers that you wouldn't even believe. We're in at what, 1.5 now? We were at like 20. Like it was crazy. Like folks, the numbers we're at right now are like baby compared to what they pulled off in the 80s were a wild time. Like obviously I wasn't there, but I hear they were a wild time, not just hot fashion. But right now, I mean, we're going to have to see. I'm always paying attention to CPI. And folks, just so you know, that comes out every month. Pay attention to unemployment, CPI, and PPI, and even retail sales were weak. That's another thing that concerns me right now. So this morning, they expected a gain in retail sales of 0.1. It came in at a loss of 0.3. That's concerning because retail's not as strong. And then if you look at Target, Walmart, Crocs, these consumer defensive plays, they're all reporting that their inventories are spiking, which is saying no one's buying shit. All of a sudden, if you have more inventories, Target just went through that big thing 2 weeks ago where it got clobbered because they're like, hey, like we're actually like the spike in inventories, retail's weaker. It's just eating away at that cushion. And it's going to be, are they going to pull it off? I mean, I don't think it's the doomsday. People don't like when you say the market's going to go lower when you're going to go to a recession. And I feel for people who are in 401ks and IRAs and maybe people who are looking to retire and they're trying to get that perfect exit. Because like, I think we're going down. Like it doesn't make me happy to say it, but in a weird way it does. Because if you're an active trader, I guarantee you, if you know how to trade, you'll make way more money in a volatile bear market than you will in a basic bull market. In a bear, like I don't want people to be scared. And we were talking about sad things, and I know some people are going to lose in this scenario. But for you, if you're worried about you and your family, bear markets are where you make money. It really is. Like it just is. And like it's an awkward thing to say because I know other people get screwed in the deal, but if you're worried about you, like numero uno, like you'll make way more money in a bear market.
100%, Matt. I agree with you 100%. That's why I said this is the greatest trading environment that I've ever seen. And I, at the end of 2021, I labeled 2022 the year of the active trader. That was kind of what I labeled it as. And exactly what you just said is exactly what we're seeing, just even in True Trading Group, just using it as an example, because I see what our members are doing. We've had a lot of members that have had like milestones, you know, like their biggest days ever, their biggest months, or, you know, that we've had a lot of people on my Teachy fam. If you guys want to maybe just comment a little bit, if you guys have had hit some mile, maybe type the number 1 in chat. If you guys have had a milestone so far in 2022, but just because directly to your point, Matt, and anyone just pay attention to some of the number ones that you see come across the screen. But, you know, to your point, it's like this volatility creates such opportunity from an active trading standpoint. It's like I keep trying to tell people, like, you don't need to just be a prisoner of your 401k and just be like, oh, the market's down, so I'm going to lose money. Oh, we're going lower, I better hold on for dear life. Like, you don't have to do that. Like, there are ways to make money when the markets go down. You can learn how to trade put options. You can learn about shorting. You can learn about inverse ETFs. These are things that actually go up in value when stocks go down. Like, this is how people can actually make money in this environment. And you're seeing a lot of it, even in True Trading Group, people are having, you know, breakout years and they're hitting milestones when the market's down 22%. You know, it's like, and then when, even if you're not an active trader, taking advantage of in your long-term portfolio, this is when you want to buy. You don't want to buy when markets are all-time highs. You want to buy when stocks come down. You know, I always use the analogy about like people buying TVs. No one buys a TV November 10th.
Yeah.
They wait until Black Friday because they want to wait for the price to come down and then they're going to buy it. But it's like when the price comes down in the stock, they don't think the same. They don't have the same mentality. It's like scary for them to say, I want to buy this now that it's 40% off. You know, they'll literally punch somebody else in the face to get a TV 40% off. But when you try to get AMD 40% off, people are too scared to actually step in and pull the trigger. But to your point, exactly, that is when money is made. That is when wealth is generated.
Yeah, and like it's a very brutal reverse psychology, and I still don't think we've seen the 2022 low. It's just inflation's still going up. Inflation hasn't even plateaued. We're still increasing. Like, there are various things that have to happen in the macroeconomic backdrop for it like to go. And like, we're seeing signs. Like, for example, Coinbase just fired almost a quarter of their workforce, or a fifth of their workforce, 18%, 1,100 people. We're going to see more companies do that. There's going to be other hedge funds like Tiger Global who completely fumbled the ball and are down like 50% on the year. There's more pain coming because the problem's not solved. But with anything, you make money by following the trend. It's as basic as if you could see we have lower highs and lower lows, the trend's down, trade down. If the trend is higher highs and higher lows, trade to the upside. It's that, like, yes, you can get nitty gritty and you could talk about like suit and like whatever, the wheel strategy and options, or you could be as basic as what's the trend today? Oh, it's still that. All right, I'll trade that way. Like, you can make it as simple as you want or as complicated as you want, but to fight against the trend, that's how you're going to lose money. The two biggest things that at least I see in my like streams are people trying to fight the Fed, and then also in the world of options, of people playing it way too close. So like, you might have had a good trade, but you were off by 1 day, 2 days, 3 days. Hey, as much as Mike likes to say, one in chat, how many people have lost money because it expired 1 day too early? And if you just waited one more day, you would have made money on options. Literally, if you've ever traded options, people, you better be typing a one in chat, because that's just how it goes.
Yep.
But as soon as you create your own rules and start sticking to it, like, discipline is a thing that you battle with like every single day. Like, I could speak for me, but I know Mike would say the same. Of years into trading, you're still worried about your own discipline. Even today, I was doing great, the full stream, crush it. And then right at the end, I kind of let myself go because I was getting a little bit too cocky. A discipline issue. Like, you're going to have it. And you just try to reel yourself in. Every morning, ask yourself, what's the trend? What's going on in the macroeconomic backdrop? Trade with the trend. And that's what you need to do. And then it's things like this where you really get into what's going on with the FOMC, what's going on with elections or the next thing, to try to understand where the trend might change. That's the key of these types of conversations, and the things that I talk about every day, the things that Mike in TTG's chat talks about every day. Like, has it changing? No. Okay, we got a 0.75. And I would assume, I mean, I didn't hear your breakdown, but let me know if you think this is right of where you're going with it in terms of people looking for the next couple of weeks. I actually think we see a baby jump right now. I see some upside gap fills in the SPY, the Qs, the Russell. I'm looking for an upside gap fill. Depending on how crazy it gets, potentially a bear market rally. I think there's going to be a bit of a relief. And then I think we're going to flop back over. That's where I see it. I'm curious what your take is, but hey, we have not chatted yet today, so I'm curious to see what yours is.
That's funny that's what you said. I actually, on our live stream last night, I gave an entire breakdown. I gave an entire analysis on what I believed was going to happen today. We've got a 2-minute clip from last night's live stream. So guys, what we'll do right now is we're going to roll the clip. It's about a 2-minute long video clip. This is from last night's live stream, from where I gave everyone my analysis on what I believed the SPY was going to do today. Let's go ahead and play that clip. Adam.
This is the clip.
Yeah, this is it.
This is our interactive.
I think Adam is just waiting for it to load up.
Oh, some of those file generation can be big. Is it basically you just?
He just messaged me. He's refreshing on the Restream platform that he's always logging out, logging in because his screen froze. We'll be right back, guys. Adam's just refreshing and then he's pulling it up on his end. So again, this is a video clip from yesterday's live stream. We go live 6 days a week here, folks. So if you guys are new here, make sure you subscribe to the channel. All right, we've got it now. We're good to go. So let's go ahead and let's play that clip.
What are the takeaways? Tell me the takeaways. What are the takeaways?
The takeaways for tomorrow is I do not believe you get a 100 basis point hike. I do not believe the Fed is ready to wave the white flag and Volcker us just straight into a recession. I don't think that they're ready to do that yet. I don't think you get 100 basis points. I do think you get 75. And I think it's possible that the markets could actually bounce back into the 380s if you get 75 basis points. Now, that bounce will be nothing more than a relief bounce. And I would wait that bounce out to then get short again and look for the markets to then go back down and go back lower and go to the downside. But I think that if you get 75, the markets could bounce tomorrow. They could bounce. The markets are oversold.
You mean it's a bottom and then we're going to flip flop and be bear and be bullish?
No. I just think that there's a trade there to the upside.
But it's going to go to new all-time highs tomorrow, is what you're saying.
Yes, tomorrow. The market's going to be up 50% tomorrow.
So we should all second mortgage our homes and buy the dip.
Everyone. No, don't even mess around. Don't even say that stuff. People don't realize that you're joking. Let's take that back. Let's not mess around.
I am 1,000% joking for those that don't know that I'm joking.
Yeah, so I think that if you get the 75 tomorrow afternoon at 2:00, I think the markets could actually move higher. Then you get Jerome Powell's press conference. And if his press conference is very stern, it shows that the market will feel like the Fed is taking this very seriously. And the Fed does still feel like they are in control. And I think the markets could rally into the close. Because you get 2:00 the announcement, 2:30 is the press conference. So I think you can actually move higher during that time period if you get the 75 basis points. Okay. But that rally, I don't believe is going to be very long lived. Well, there you have it.
Very long lived.
There you have it, Matt. So that was literally just from last night. A quick video clip. Obviously, Adam and I were having some fun there. Adam was busting me a little bit there. But we had a fun informal live stream yesterday. But there you have it. Our opinions line up. It sounds like I literally just repeated exactly what you said. And Matt and I did not talk about this prior to this live stream. We never do. We always just like, hey Matt, what's up, man? We always just kind of roll right into it because I'm trading during the day inside a chat. Matt, I know Matt's doing his streams with the Moon Gang, so we don't talk beforehand. But yeah, man, I'm kind of right there with you. I think that and we got it today. Like I'll just pull up my my screen real quick just for those that are watching this here. I mean, this is today. This was you got your 75 basis point announcement, and then Jerome Powell spoke, and the markets pushed, and we went higher, and we went right into the 380s. We got all the way up to like 384. Okay, but like the area up there in the 380s, like 3,800 to 3,900 on the S&P, is a very, very, very tough level of resistance that I think is going to be a difficult one to actually crack. And just talking directly to Matt's point about, he's like, I see some gap fills above us, and that would literally fill this gap, okay, right here, right? That would fill that gap if it takes you back to 3,900, and that's the resistance zone. And why is that a resistance zone? Because it was previously one hell of a support level in May. That was this support level in May, okay, is where everybody thought that the bottom was in, right? Like there was a lot of people, Matt, I don't know if you knew this. I don't know if you were catching slack for it, but like I actually had people on my live stream say that I was an idiot when the SPY was at like 415, when I was like, nah, I don't think the bottom's in. I'm like, the bottom's not in yet. I think we're going lower. And I was called names on my live stream. And now all those people that were talking, smack for a week, I haven't seen them in quite a while. So I don't know where they are. Maybe they're licking their wounds somewhere. I'm not really sure. But sure enough, we cracked that level. And now I'm going to look for that area just to become resistance. And I think like any rally that you get into that zone, I think you've got to, listen, if you're going to trade it to the upside, take your profits, but remember the trend is still to the downside. And I think we've got one more little before I would say, okay, now it looks like we're starting to get the bottom. I think we're really close for 2022. I think the low of the year is close. I think it happens within the next 4 to 6 weeks. I think we get the low of the year gets put in, because I actually believe that once you get to like September, I think the markets actually start to bounce back end of the year. And I think that in December, the markets are higher than where they are in June and July. I don't think we go back green, but I think we're higher in December than we are June and July.
Yeah. I think in the short term, what I'm looking for is actually that second gap fill. I don't know if we'll get it, but I think I'd feel way more comfortable getting puts at 401, whatever that top one is from the gap down.
Yeah,
we might not, but to me, like if I were to like do this perfectly, hey, over the remainder of this week, maybe the first half of next week, we pop up to there. I see it start to bend back over. That would be what I'm looking at in terms of this medium term. Not just this seasonality that Mike is referring to. I'm like a little bit more maybe conspiratorial, but I'm thinking they'll give us the pain before we really get rocking with the elections. And then I think there'll be political pressure to get relief in the stock market. One of the best indicators of getting reelected truly is how is the market doing, what are gas prices at, just because that's what people vote on is like the pain that they're feeling. So I think they'll give us pain now to try to give us that relief later when we're going to the ballots to vote. And that is roughly that September timeframe. In terms of the level, this is tough and it's getting nitpicky, so please take this with a grain of salt. But I will personally be loading up in my long-term account and also on crypto. Probably I'll start the SPY below 370. And if I see it printing anywhere in the 350s, like even 359, that's where I'm going to heavily be buying myself. And if it goes more, whatever. But like that's where I'm going to be loading up myself.
100% agree with you. You and I, it's so funny, man. It's so funny that we don't have preliminary conversations, but we always seem to be looking at the exact same levels and the exact same areas. I did a little nibbling a few weeks ago when we were in the 380s. I did a little nibbling. I bought 9 different stocks when we were in the 380s on the SPY back in May. Just 20 to 25% starter positions, just to kind of like dip my feet, dip my toes in the water. When I add in my long term, I like to do it in like phases. I like to take like 20 to 25% first. And then when I get my real target, which for me is under 3,700, so under like 370 on the SPY, that's when I'm going to back the truck up. I'm going to buy big chunks of the stuff that I want. And then if we actually do go a little bit lower, I'll have a little bit more cash on the sideline that I'll deploy. But there's some people calling for like 340. I don't think we get that low. But I do think like into the 360s, I do think that's a very realistic possibility. I mean, hell, we got to 370, just yesterday, So, I think that we got a little bit more room to the downside, but I think 25 to 30% decline in the S&P for 2022. I think that's kind of right where we're at, and that's where I'm going to do the bulk of my buying. So we're right on the same page.
Sweet. I definitely agree. And for those of you who are curious, so like the TTG fam, but whether you're from the Moon Gang or whether you are just a viewer who's watching, all this stuff, like this isn't really a secretive thing. Like there's a reason that Mike and I had these same opinions, like independently. We might be right, we might be wrong, but we're basing it on the same thing to target those same levels. And if you're curious about it, I get it. Like some of these things, especially in the world of finance, is too good to be true. I'm just trying to get money. Like, why would I sign up for that type of a thing? I get that vibe. If you go to any of my videos, even the one today, but any of them, there's going to be a link there. You could try out TTG for free. Absolutely free. I believe you need a first name and an email. So if you don't have a first name or an email, I'm sorry, TTG is not for you, but you should have a first name and an email. Try it out for a week. You don't have to spend a single dollar of your money, and you see what's going on. You're going to get some education model, you'll get the chat room, and you'll see if it's for you. And I say that, and like, obviously this is a paid membership type of a thing. The people who have come from Moon Game and done that, and they got the first week free, they were ecstatic. Like, I've met people who've made it back on their first couple of trades. They already paid for it. And I know there's going to be the whole spiel and everything here, but just from my own side, Adam and Mike here, if you prove that you gave it an effort, if you like said, hey, I did all this, here's the proof, here are the quizzes, here's me in the one-on-ones, here's me in the chat room, and you don't figure it out, they put their money where the back of their mouth is, and they pay you. They're like, sorry, okay, it didn't work out. We tried our best, but like, good luck. You're not going to find another trading service that does that. So if you give it your full-fledged effort, you have nothing to lose. It's that simple. You don't have anything to lose for the week trial, and you don't have anything to lose when you actually pay if you actually put in the work. That's all Mike and Adam are ever trying to get across to you. Is they feel super confident in making you a profitable trader to the point that they'll pay you if you can't make it profitable. You just have to put in the actual effort. And you're going to hear people, don't ask me, don't ask Mike, don't ask Adam. Find a random person in it, and I swear, just DM them. It's up to you. Don't even have us involved. DM a person, be like, was it worth it? I'd be willing to say, yeah, like maybe I had a rocky start and I got going. That's the best way to ever do this type of thing. Do your own little research. Reach out to them. If you want to talk to Chris, who's on stream, or anyone in chat, literally just DM them and see their own experience in it. It's that simple.
You know what? I'll actually, speaking of that, I'll actually, to Matt's point about like asking members, like go ahead, talk to members, see their experiences. I know we have a lot of teaching members that are on this live stream right now. And I'm gonna ask a question directly to members. If you are a member, I'd like for you to type the $ in chat right now. Very simple question. Are you making money and becoming better traders because of True Trading Group? If the answer is yes, type the $ in chat right now. I get asked questions like this, Matt, like all the time, like how, you know, like, and I always like to ask members to answer these questions for us because it doesn't mean anything coming from me. Like when someone's on a live stream and they ask me like, oh, like, is anybody making money in your group? What am I going to say? No. Like, of course, like if I tell you, oh yeah, everyone's making money, it doesn't mean anything coming from me.
Yeah.
You know, so like, that's why I always say that whenever it comes to like experiences, how are members doing? I always like to ask questions on the lives and let members comment. And if you're not a member, you can see all the comments that are coming through in chat. It's the best way for you to get a feel for how members are doing by actually, you know, talking to your peers. And if anybody's on this live stream that has, comment in the chat. If you're not a member and you have questions and you want to know if this is worth it, like members are here. You see members are answering your question. They'll answer for you. You know, we got about 9,500 people in the True Trading Group community. And trust me, they all give a damn about each other and they're all willing to help and they're all like-minded, and the camaraderie in the community is nothing short of amazing. So don't be shy, you know, when you guys come on here. All right.
But you do have to have a first name, I saw, for your sign up. So if you don't have a first name, we're sorry. You have to go find another one.
If you don't have a first name, if you don't have an email address, then True Trading Group's not for you. But
other than that, we can help you out.
Yeah. Well, Matt, man, I want to thank you again for coming on here and joining me. Always an awesome conversation. It was fun kind of having you on to interview Chris earlier. That was really cool. And it was a big day today in the market, you know, and it seems like you and I are aligned in our expectations and our projections, and we'll see what the rest of this month brings. And good luck to you and the Moon Gang on the rest of the month. And then we'll see what happens once don't forget, we got GDP numbers coming up too.
Oh, yeah.
like as if there's not enough stuff going on. We got GDP numbers coming up in a couple of weeks as well. So you're literally going to get GDP numbers. Then you're going to get another round of CPI and PPI data. Then you're going to get another rate hike from the Fed. It's like the market doesn't have a chance to really kind of absorb all this. The market is just getting like punched in the face with like catalyst after catalyst after catalyst. I'm telling you guys, this is going to be one hell of a summer. It's been one hell of a year already, and I'm excited for what the second half of this year. I can't believe we're almost halfway through the year already, but it's been amazing, and I expect nothing less for the second half of the year. Matt, thanks a lot for joining me tonight, man. Always a pleasure.
Always a pleasure. Thanks. I'll talk to you guys soon. Best of luck, TTG. Shout out Moon Gang. Catch you guys later. Have a good night. Man.
Awesome. All right, folks. Well, there you have it, guys. What I'm going to do here now, listen up, guys. We're not finished with this live stream yet, so don't go anywhere. I'm actually going to open the floor up for a blanket Q&A session. I'll let you guys ask me some questions. I feel like, today was a big day with the Fed and rate hikes, and, we had some comments from a market maker earlier on this live. So I'm going to open the floor up for some Q&A. If you guys want to ask me questions, whatever's on your mind, whether it's like the markets, the Fed, individual stocks, whatever it is, you guys can ask me anything. I'm here to help. First, I'd like to find out who's on the live stream still that is not a member of True Trading Group, though. If you're not a member of TTG, I'd like you to type TTG in chat right now, guys. Just type the letters TTG if you are not a member of True Trading Group. Okay? Just type the letters TTG if you're not a member of the TT fam. I want to see how many people that we have here that are new. So let's see here. All right. Black Horse, this is the sales pitch. So let me know what you think. Let's see. Dion, TTG. We got Carlos. We got Andy, PW Mac, Doug, Joseph, Todd, Eddie, Steve, Dick, Hannah, Ryan, John, Johnny, FS Panu, Carlos, For Late, Gary, DJ. We got Nick Piscopo, Jermaine Gardner, Yosef, Cybertruck, Wizard. You got me. You got me. Wizard, you got me. You damn it. Brian, Laura, Native, Paolo, Bosvan, Matthew, Twilia, Agnes, K-Dog, Trading Ever After, Adam, Who You, what's up, everybody? A lot of new faces here today on this live stream. I'm so excited to have a lot of these new faces that are with me here today. Guys, listen up real quick. What I'm going to do, don't go anywhere. I'm literally going to spend the next about 5 to 7 minutes. Okay, I'll tell you guys real quick about the TT platform. There's a couple of people that were asking about the platform. I'm going to spend 5 to 7 minutes, tell you how you can join. Then I'm opening the floor to a Q&A. So you guys can ask me whatever's on your mind. Don't be shy. Don't be embarrassed. Asking questions is how you learn. Never forget that. Okay, you guys got to realize, though, that when you join True Trading Group, you're going to be getting the same level of professional education that I received when I worked at a hedge fund in New York, my first job right out of college. It's a simplified and expanded upon version. It's easy to understand and implement quickly, yet it's in depth and it's also complex. Whether you guys have never traded a day in your life or you're a 10-year pro looking to kind of gain an edge, this platform can help you guys reach your goals. We get asked all the time, what makes True Trading Group different from other courses? We are not like other courses. TTG is a platform. Okay. Yes, our platform contains courses. But when you join True Trading Group, you're getting access to the tools that successful traders use that helps them make better decisions. Tools that are from today's top fintech companies that would cost you about $5,000 a year if you purchase them on your own. Even if you don't join True Trading Group, if you guys want to really maximize your full potential, you're going to need these tools. You get access to them included free with your membership to TTG, like Benzinga Pro's real-time newsfeed, TradingView's premium charting software, Quote Media's full book level 2, CBOE's unusual options activity, Polygon's dark pool data, the Trade Ideas scanner, the ETNA simulator. All of those tools are included free, no upsell, no additional charge when you join the TTG platform. That is what makes us a platform. And as if that wasn't enough, you get our entire curriculum. There's no VIP courses that cost more money after you join. There's no upsells. You pay one annual price, you get access to all that we have. That includes also, in addition to the courses, about 300 hours of additional video content and workshops and webinars that we've conducted covering different topics. We get all of our transparent real-time alerts. We literally come on the microphone and tell you what we're going to do before we actually do it. Myself and 8 other professional traders are live on a microphone telling you what we're going to do before we do it, and we're there with you the whole day. We're not just done after an hour or two and you look to fend for yourself. We day trade. We also swing trade. We trade stocks, options, futures, okay, crypto. We do it all inside of True Trading Group. We have a full trading journal that even tracks your trading, proprietary scanners and screeners, and also analyst ratings. Okay, all of this is included, guys. All of this is included. And to top it off, you're joining a community of over 9,500 active members now that are like-minded, helpful, genuinely care if you guys succeed or fail, and they're led by our team of full-time mods that have over 100 years of combined experience, like I said, with day trading, swing trading, and also long-term investing. Okay. Now, guys, listen up. Adam set this all up today to get Matt on and to interview the market maker. So he actually did not have time to adjust the price. So I would take advantage of this. So Chris, the former market maker that you just saw interview on True Trading Group's platform, when he joined True Trading Group, he paid nearly $1,500, okay, for his membership. You guys that are all here today on this live stream, you do not need to pay $1,500. Okay, you all can thank Adam. I would take advantage of this because the price will go up at midnight tonight. It was supposed to go up last night. You have one more night to get a 49% discount. The price is normally $2,212. It brings it all the way down to just $1,107. That's it. $1,107. If you think that's a lot of money, think about, okay, how much that you have lost going about this alone. Being in the wrong community, having the wrong education, using the wrong tools. Think about how much money you would still have if you had all of those things to begin with. When you start thinking of it that way, the 1107 starts to sound like a no-brainer, and that's because it is. You also get 2 free private study groups with one of our pro traders when you join. This is your chance to get some individual attention in the small group setting so you can ask questions and go over topics that you're unsure about so we can speed up your learning curve. And last but not least, you heard Matt talk about it, and it is the truth. I put my money where my mouth is. I believe so strongly in our ability to help you become successful that as long as you go through our courses, quizzes, and attend a study group, if you do those 3 things and do not make your membership fee back at least once during your membership with us, I will give you double your money back. I am dead serious. Okay. That's $1,107. You pay to join tonight. If you do not make the $1,107 back, I'm going to give you $2,214. I can do that with a smile on my face because I see the results that my members are having. You saw how many people typed the $ before in chat when I asked the question, who's making money? Just see for yourself. We're 5-star rated on Trustpilot, over 1,600 reviews. Go read for yourself. See the results that our members are having. As long as you're willing to put in just a little bit of time, energy, and effort, I'm confident in our ability to help you become successful. We've only had to refund 2.48% of our user base since 2016. I share that number with you, not just to prove how infrequently we get a refund request, but to also prove that the refund is real. We've never denied anyone of that refund. As long as you come to us and say, hey, Mike, I tried, man. I went through the courses, did your quizzes. I attended a study group. I never made the 1107. I'm going to say, sorry, our platform did not work for you. Here's double your money back. Best of luck going forward. Okay. So there you guys have it. All right. So you can just go to ttgoffer.com and enter the coupon code TTG121. Okay. You go to ttgoffer.com right now, enter the code TTG121, and that's how you guys can get that 49% discount before the price goes up again. The price was $1,000 just a couple of days ago. It's $1,107 right now. It's going up again at midnight tonight. Do not let this $1,107 price point pass you guys by. All right. That's ttgoffer.com, TTG121 coupon code. If anybody has questions about the membership, there's a lot of new faces that are on here, a lot of people that are not members. If you have questions, send a text message. Don't call. It's a text message only number. Send a text message to 201-775-9702. The phone number is at the bottom of your screen. You're not going to be talking to a customer service rep. That text message is going to go directly to Adam, who is my business partner and co-founder of True Trading Group. We will be speaking directly with one of the owners of this company. So send a text message to that number right now if you have any questions about the TTG platform. Okay. So there you guys have it. All right. Again, that's ttgoffer.com, TTG121 coupon code. Okay, guys. So there we have it. All right, guys, let's, what I'd like to do now is I'd like to go ahead and I'd like to begin the Q&A, right? I told you guys I was going to open things up for a nice little Q&A session, give some time for people to, really ask whatever's on their mind. You got a rate hike today, inflation's out of control, people are talking about a recession. So I'm sure there's a lot of questions. All right. So don't be shy. Don't be embarrassed. Okay. Asking questions is how you learn. So go ahead right now, guys, begin typing questions in chat and let's begin the Q&A. All right. Okay, thanks. How much capital should we start with? Asks Lewis. Lewis, it's a very big misconception that a lot of people have, thinking that you need to have tens of thousands of dollars in order to get started. It's simply not true. We have a lot of members in True Trading Group that started with a couple $100 in their account when they first joined. I always tell people I'd rather have $500 with an education than 500,000 and no education, because it doesn't matter how much money you have in your account. If you don't know what you're doing, you're going to lose all of it just the same. Just because you've got $1 million in your account does not mean that you're going to become a better trader. All it means is you're going to lose $1 million instead of losing 500. Okay. To prove this to you, and like I said before, I always like to ask members to answer these kind of questions rather than me just saying these things. How many of you that are you are members now? Now I'm talking to members directly. If you are a member, okay, if you are a member of True Trading Group, if you started with less than $1,000 in your account when you joined, comment in chat, okay? Comment in chat. Tell me what you started with and tell me where you are now today, okay? So again, if you're a member of True Trading Group, comment and tell me what you started with and where you are today if you started with less than $1,000. All right, so let's see some of the comments coming through here. Yes, Firefighter Greg started with just $800, is up to $3,000 in just 1 month. Cybertruck goes, I started with enough for 2 shares of Tesla. Now I've got more than 30. I like the way you put that. That's awesome. RG83 started with 500, is now at 3,000. IQ started with 600, is now at 3,700. Bruce Sears started with just $500, is now well over. So you guys are starting to see firsthand, you're starting to see from members of True Trading Group what they started. We see a lot of members here started with just a couple $100 and are now moving those accounts up to 4-figure, some even 5-figure accounts now after starting with just a few $100. Okay. So there you guys have it. Kathleen Duke, my girl. Kathleen Duke started with $100 and is now just under 16,000. That is my girl, Kathleen Duke. All right. So there you guys go. I don't need to continue reading. You guys can read the rest of the comments that are coming through chat. I don't have to keep going through them, but there you guys have it. All right. So there you guys have it. So like I said, very common misconception that you need tens of thousands of dollars to get started. It's simply not true. Mike, spot at 390 before it tanks again. I don't know if we get all the way to 390. I think we push into the 380s, which is what you got today. I don't know if we go all the way up to 390s. I mean, listen, it's possible. I just think that 3,800 to 3,900 on the S&P, so call it like 380 to 390 on the SPY. I just think that zone is going to be just too heavy of a resistance area, and I'll draw it on the screen for you guys. All right, just so you guys can. I'm going to highlight this whole entire zone. This whole zone is going to be a level of resistance now on the SPY. That was a major support level when people thought the bottom was in. And this is when people were calling me an idiot for saying that the bottom was not in. Turns out that we were right. And now I expect this zone to be resistance. So I'm really looking for, moments where we get into that zone where the markets then run out of steam, get puts, and then start to roll back over. And you can set stops up there around that 390. All right. I work a 9 to 5. Is your platform worth it? Joseph, Yes, brother. Our platform is actually perfect for people that work 9 to 5s. The thing that you'll learn as a member to Trading Group is that there's a lot of different varieties.
Real quick, that is not Joseph that works for us because his name is Joseph S. I literally hit up Joseph. I hit up Joe when I saw that message, and I was like, "Hey, man, would you just give up?" You know? And he's like, "That's not me." I was like, "All right, cool."
That's funny. So guys, if you work full-time jobs, I mean, our platform is perfect for you because first of all, none of us we're not scalpers at your Trading Group. So, not that I don't have anything against scalping, but none of us are scalpers. So a scalper is someone that gets in and out of trades within like seconds or minutes. If you're working a 9 to 5 job, that's physically impossible for you to do. You can't do that if you work a real job. So none of us are scalpers. So we are day traders and swing traders, traditional day traders where we hold on to trades for like several hours during a trading day, or we swing trade, which means we hold it into the next day or the next week or, however many days thereafter. Okay. And we also have a mobile app that allows you to stay connected to chat, even though you're not in front of your computer. So Joe, as long as you can listen to music at work, you can listen to the chat room because the mods talk on the mic and you get real-time push notifications whenever one of our mods enters or exits a trade. That's how so many of our members are able to benefit from this while having full-time jobs. And the majority of our members do have full-time jobs. Remember, there's over 9,500 members in the TTG community. Most of them have full-time jobs and they're still able to make money. And I'll actually prove that to you. Joe, I'm not sure what you do for a living. I'm sure there's a bunch of other people on here that work full-time jobs that probably have a similar question. So let's do this. Guys, if you're a member of True Trading Group, if you are a member, do me a favor, type the number 1, and then tell me what you do for a living if you are making money while working a full-time job with True Trading Group. Specifically, are you making money while working a full-time job with True Trading Group? If the answer is yes, type the number 1. Tell me what you do for a living. Joseph, check out some of these comments that come through chat. Maybe you can see somebody that has the same profession as you do. Anyone else that has a similar question, you guys could all just pay attention to some of these comments that come through chat. I'll just read a couple of them off the cuff here real quick as we get some of the comments that start to come through. Here we go. All right, we got a machinist, we've got a school nurse, probation officer, a dog walker, works for Tesla, a truck driver, legal, construction manager, firefighter. I cut down trees, network administrator, construction IT. All right, so you guys can see for yourself. You see a lot of the members that are coming through chat right now. All right, you guys can, I don't need to keep reading some of these, but you guys can see for yourselves. You read some of the comments that are coming through chat. Police officer, a wrangler, okay, high touch ops manager, IT, Cisco, supply chain, window washer, okay, document controller. You guys can see, you see a lot of the work at Walgreens. So you guys can see for yourself. There's a lot of, I don't need to keep reading all these, but you guys can go through and read some of these comments. All right. Okay, guys, I think Adam's got something here. I got to play a video on this topic, actually, real quick, guys. We have a video that I want to actually share with people that's actually about this topic specifically. Are you coming on, Adam, or?
Hey, Suge, I just want you to know, if you can, tell Mike I'm up here waiting for the Fed minutes.
Holy crap!
I'm waiting for the Fed minutes to come in and see what he tells me to do. TTG strong, STR strong. I'm gonna get it.
Yes, I love that. Oh my God, that is insane. Oh wow, that is insane, dude. What's your excuse now? This guy's up a tree. This guy's up a tree. That is incredible. Oh my God. Oh, that is incredible. That's amazing. Yes, but you see how he had his earbuds in? That's it. That's literally all you need. Okay, you don't have to be sitting in front of a computer screen all day long. It is literally, can you listen to music while you're at work? If the answer is yes, you could do this. Our mobile app is available for iPhone and Android. Okay, you can listen. The mods and I talk to you throughout the whole day. We tell you what we see. We give you market commentary. Before I enter a trade, I come on the mic and I'm like, all right, guys, listen, we got support here at $20. I'm looking for a pullback at 20.25. I'm going to be a buyer here. My stop loss 19.50. I'm taking profits off 22, 23. Like, that's literally what I say on the microphone before we get into a trade. And then once my order, all the mods, once our orders execute, you get the push notification that pops up with the price and everything of our execution confirmation. Okay, that's how our program works. And that's how so many people that work full-time jobs, even if you're up cutting down a tree, can still follow along with what it is that we are doing inside of True Trading Group. And that's how so many members that work full-time jobs are able to benefit from this. And we're not scalpers. So it's not like my man's up there on a tree and he places a trade and then, 90 seconds later, he's got to get out of the trade because we're taking profits already. That's not the type of traders that we are. We're the type of traders that, hey, you're going to get an alert at 10 o'clock. You might get an alert at 11 o'clock that says we took profit. You might get another alert at 1 o'clock that says we took more profit. And then at 1:30, 2 o'clock that says we just got flat, final take profit. Can you do that? How about if we say we buy a stock today and then tomorrow morning you get an alert at 11 o'clock in the morning, like, okay, guys, we're taking profit from yesterday's entry. Sounds a lot more doable now. It's all about the trading style and strategy that you're implementing. Okay, so if you work a full-time job, you've got to adapt and implement a style and a strategy that's going to fit your schedule. All right. So there you guys have it. All right, folks. Awesome. I love it. That was Trader by Blood, not relation. That was who that was that we just played that video. So that's awesome. That was awesome. I appreciate that. That was fun. Be careful up there. Please. Please be careful up there. All right, guys. Next question. Guys, don't forget, price goes up at midnight tonight. So ttgoffer.com. Go there right now. TTG121 coupon code. If CPI readings continue to come out hot because the rate hikes weren't high enough to curb inflation, do you still see the market bottoming over the next 4 to 6 weeks? So like you're saying, so like if July's number or if June's number that we'll get in July is higher than May's, and then if July's number that you get in August is higher than June's, I don't think that's going to happen. I think inflation will start to top out here in the mid 8s. I don't think it's going to come down as quickly as people think it's going to, but I don't think we're going to see like a 9.2% inflation. I think inflation's kind of starting to top a little bit. There's certain areas of inflation that are beginning to top and are beginning to roll over. There's other areas of inflation that are still moving higher. And I think that kind of creates just like a stagnant place. But if that is the case, J Trades, if June's number is higher than May's, if July's number is higher than June's, if August number is higher than July, like let's say, for example, it was 8.6 for May. Let's say it's 8.8 for June, and then it's 8.9 for July, and it's 9.1 in August, then no, I do not believe the market's bottom in the next 4 to 6 weeks. Okay, but I'm making a stance that I don't believe that August's inflation number is going to be higher than May and June's. I just don't think it's going to. I could be wrong, and if I am, then I would say that the markets do not bottom in the next 4 to 6 weeks. Because that would just show that the Fed has completely lost control, and now you're talking about hyperinflation and runaway inflation, and that would be something that I don't think is going to happen, but that would result in me saying, okay, if that is the case, then I do believe the markets go lower than where I'm anticipating us bottoming here in the next 4 to 6 weeks. But great question, great question. Everybody, welcome Chris, newest member of the TTG fam, guys. Welcome, Chris. What's up, Chris? Welcome to the family, man. TTGoffer.com, TTG121 coupon code if you guys want to take advantage of the 49% discount before the price goes up again. It's 11:07 tonight. It was just 1,000. Now it's going to be going up again at midnight tonight. So, guys, don't sleep on this. Get the 11:07 price point before the price goes up. Don't forget, you get the 2 private study groups as well. And then I've got that double your money back guarantee to hold us accountable and to protect you. Chances are you're not going to need it because, like I said, we've only had to give back refunds for 2.48% of our user base since 2016. And we have a 78% retention rate, which means 78% of our members, okay, are renewing their membership with us when their membership is up. Okay, so that's actually a really good point too, because the 11:07 price point, the price that you pay when you join is the price that you're paying for life. You're grandfathering yourself in at that price. So next year, even if our membership's $2,500, it won't matter. You'll only have to pay the 11:07. So that's why if you guys want to jump on this 11:07 before the price goes up, it's going up at midnight tonight. Everybody, welcome Tyler. Tyler's another new member of the TTG fam. What's up, Tyler? Guys, welcome Tyler, the newest member of the group. It's a pleasure to have you all with us through these crazy and exciting times. Welcome, Tyler. Do you still think we need a capitulation day for the bottom to be found? Charlie said, yeah, I kind of do still. You know, I kind of do. I want to see the VIX at 40. I want to see the VIX at 40. All right, I really do. I want to get it over. I want to see the VIX spike higher. You know, the VIX right now, I'll take it to you guys. The VIX right now is just not showing any, any sign of a bottom. You know, or any sign of capitulation. Now, to put things in perspective, you want to see what the VIX did when the markets bottomed in 2020. They did that. The VIX did this when the markets bottomed in 2020. Okay. So I'm looking for, but that was complete and utter sheer panic. We're nowhere near that type of volatility. But you'll notice here, this flat top here across the VIX, right? You see this here on the VIX? See that flat top? I want to see us get over that. And if we get over that, let me actually just reshare my screen so you guys can see. All right, so again, I'll just show you this. So this is the VIX, right? So here's the VIX. The VIX measures volatility in the overall market. Okay, that's what the VIX does. Okay, so as we go back, you'll see that this was the VIX when you had the 2020 crash when COVID first hit. Okay. Now, you're not going to get anything like that because the COVID crash was a complete out of nowhere event that nobody was prepared for. So the move was exaggerated because it was a shock. This is not a shock. This market sell-off has been very methodical. It's been very expected. It's been very kind of forecast and telegraphed. And there's been a lot of time for people to position themselves and to sell. During COVID, you didn't have that. It was just an overnight thing and the market just had a complete panic attack. But you see this level here, okay? You see this like flat top on the VIX, right? I want us to get above that. And if we can get above that, okay, that's when I think the bottom can be solidified. Okay, that's when I think the bottom could really be solidified. I just want to see something like that, right? Like if I see something that looks like this, okay, that's when I'm going to start to say, okay, folks, like I see this, right? I'm going to say, boom, that's it. There's the bottom. I'm going to start buying. And then the VIX will then start to come back down as the markets kind of stabilize and the fear and the volatility subsides. So I still do think that we have the possibility of capitulation, but I don't think that you're going to get a V-shaped bottom. I've been pretty vocal in my thoughts that throughout June and July, I thought the markets were going to go through a bottoming process where the markets are going to make new lows. They're going to bounce back. Then they're going to drift back down towards lows, look like we're going to break, bounce back, drift back down towards lows, break the low, bounce back, and go through this little bottoming process for the next 4 to 6 weeks before eventually stabilizing in August. I think August is like a very low volatility type of month. And then September, October, the markets can start to bounce, and you have an end of the year rally as inflation has come back down, and there's a lot less uncertainty, because by the end of the year, you're going to know, the markets right now don't know how high the Fed has to move rates in order to stop inflation. By the end of the year, you're going to know, or you're going to have a much better idea of how high interest rates have to go in order for inflation to come down. You're also going to know by the end of the year, well, are we in a recession or not, or is one coming definitely or not? You're going to have a much better idea of that by the end of the year. The market does not like uncertainty. The market is a forward discounting mechanism. It tries to price in 6 to 7 months into the future. When the markets can see 6 months into the future where we're going to be, the markets trade perfectly fine and normal. It's when there's too much fog in front of the market where they can't see 6 months ahead that the markets start to have these panic attacks. Once you have more clarity on the levels and the rates of inflation and interest rates and the likeliness of a recession, even if you get the recession, the fact that there's clarity on it will stabilize the market, and the market can start pricing in now, okay, how bad of a recession? When do we think we're going to come out? Throughout history, whenever you've had recessions in the market, the markets have actually moved higher while you were in the recession. It's not like, oh, the market's in a recession, therefore the market's now going to crash and it's going to go down to zero. When recessions happen, the markets price in the recession, the fear of the recession. And then when you're actually in the recession, the market now starts trying to price in the recovery. In 2009, we were still in the depths of the recession, the Great Recession, mind you, which lasted a couple of years and was extremely deep and resulted in massive unemployment and a 56% decline in the S&P 500. That was literally the worst recession that we've ever seen in our lifetimes. Okay. I don't believe you get anything similar to that this time around. But even during that recession, the market went down 38% in 2008. 2009, the market finished the year up over 20%. Let me say that to you again. In 2009, the S&P was up more than 20%. And now you might be saying, how is that possible? We were still in a massive recession, but the market was up 20%. This is what I'm talking about. This is what a lot of people don't understand. A lot of people don't realize these facts. And that's what these are. These are facts. I'm not even talking to you about my opinion. The worst recession that we have ever seen in history, the S&P went down 38% in 2008. By the time the year was over, December 31st, the S&P in 2008 was down 38%. December 31st of 2009, still in the recession, the market was up over 20%. When the market sells off going into the recession, that's where the opportunity lies. How Matt was saying before, when I had Matt Kohrs on just earlier, he was talking about, bear markets is where you guys make money. That's what he's talking about. Okay? This is what I'm talking about. These next couple of weeks is where the wealth is built. Because I believe we're going to look back into 2024, 2025, 2026, and we're going to be over 5,000 on the S&P. And you are going to be happier than a dog in fresh cut grass that you joined the True Trading Group at this moment. You seized the opportunity in front of you. You took control of your own financial future. You were not handcuffed and imprisoned by your 401k balances being just decreasing on a daily basis. You took charge. You took control. You learned how to identify opportunities in this market, because when markets go down like this, it's a transfer of wealth. It always has been. It will continue to be. But we are here. We exist as True Trading Group to make sure that you are on the right side of that transfer of wealth for a change. Because historically, retail traders are the last ones to sell during a stock market crash. They're the last ones to sell. The best of the professionals sell first. Then the rest of the professionals sell. Then retail investors sell at the bottom. And guess who's the first one buying? The best of the professionals followed by the rest of the professionals, followed by retail. And it's the greatest transfer of wealth that you've ever seen. It happens every time. Okay? It happens literally every time. Okay? So that's where we are. And I'm telling you guys that I think over the next couple of weeks, I'm going to be doing some serious shopping. I'm going to be doing some serious shopping. All right? So there we have that. Folks, listen. Now that we got the rate hikes out of the way, we're looking to see how far does this little relief bounce take us. Okay? We're going to see how far this little relief bounce takes us. I am going, and I'm telling you guys this now for the next couple of days, I'm going to be focused on the overall market. I'm going to be focused on the SPY, and I've got SPY options on deck. I'm looking for a big win here to finish out the week, folks. I'm looking for a big win here tomorrow into Friday. I'm looking for a big win here. I think we're going to get a really nice move in the overall markets, and I'm going to be focused on the overall SPY, and I'm looking at options, and I'm going to walk you through, guys. I'm going to walk my TT fam through that entire process, but I'm looking to finish this week out big. I'm looking to close this week out big. We got exactly what we wanted. That was the 75 basis point hikes. They gave us a little bit of a bounce into the 380s. I still do believe into the 380s. The 380s is an area of resistance. Once that bounce runs out of steam, we jump back on things to the short side, and I think we get puts and we break 3,700, and the SPY drifts down into the 360s, and we're going to be ripping profits off on those options along the way. All right. Guys, the code word for tonight, this is for members only. If you're not a member of True Trading Group, don't worry about this. It's for members only. The code word for tonight is sweat. Okay, sweat is the code word here for tonight. Sweat. That's code word number 7 of 18. Okay, code word number 7 of 18. Code word is sweat. Okay, sweat. Code word number 7 out of 18. That's the code word for tonight. This is something for members only. We do a lot of fun giveaways. We give away cash, electronics for members. So this is part of this is part of a $5,000 giveaway. If you're not a member of True Trading Group, don't worry about this. It's irrelevant. It's not for you if you guys are not a member of True Trading Group. Okay. So there you guys have it, folks. That's it, guys. That just about wraps up the educational part of the live stream. Hope you guys enjoyed the interview with Matt and with Chris, the former market maker. Hope you guys enjoyed the analysis on the overall markets. What I'm going to do here now, I'll close things off. For those that are still on the live stream, if you are still interested, I'll actually show you the platform that is True Trading Group. So you guys can see all the different tools that you get access to. Because remember, you get access to our entire platform when you guys join the fam, which includes obviously our chat room where the mods and I share our screen. We're live on the mic, calling out trades in real time. We're there with you from pre-market till after hours. We're not just gone after an hour or two. And you have the mobile app, which allows all of our members that have full-time jobs. It allows you guys to still be able to follow along and to benefit and to profit from what goes on in the TG platform on a daily basis. You also get 2 small private study groups with one of our traders to get some individual attention in a small group setting where you're going to be able to ask questions and speed up your learning curve. You also get Benzinga Pro's real-time newsfeed, live breaking up to the second news alerts directly inside of our chat. This would cost you $1,400 if you went to Benzinga on your own. Don't do that. It's included for the 1107 when you join True Trading Group. You also get TradingView's premium charting software. This will cost you a few $100 if you go to TradingView on your own. Don't do that. It's included for the 1107 when you join TTG. The Trade Ideas scanner will make sure you're focused on the hottest stocks every day. Will cost you a few $100. Don't do it. It streams live on our platform on a daily basis for free. You can also use our simulator from ETNA. This is the same simulator that is used at universities across the country, like Cal State University Fullerton and University of Wisconsin Whitewater, also Berkeley Haas and Illinois Tech. This will cost you just under $1,000 a year. Don't do that. It's free with your membership when you join True Trading Group for 1107. You're starting to see this is what makes True Trading Group different. It is the fact that we are a platform and you have access to all of these things. All right. That simulator lets you trade stocks and options with fake money, but with real-time data. You also get our own proprietary scanner that has the same functionality as FinViz Elite, but also lets you scan for crypto. Nina says, is TTG suitable for long-term investors who have restriction of trading holding period of minimum 3 months? It sure is. We also cover long-term investing in True Trading Group. As a matter of fact, on January 2nd of 2022, I published a 16-page report for my TTG fam labeling the energy sector as my number one pick for 2022. And the energy sector currently sits up about 50 or 60% on the year, with all of your oil stocks sitting at or close to all-time highs. And it is by far the best performing sector of the entire year. So we were spot on with that. That report alone would be worth the cost of your membership. And I give that report out each and every single year with intermittent reports throughout the year, depending on what's going on. Okay. You guys will also be getting access to dark pool data and unusual options activity. Stuff that used to only be available to professionals. Now it's at the fingertips of the TTG fam. You also get a trading journal that tracks all your trading so you can see some statistics on your trading. A social sentiment scanner will go through Twitter, StockTwits, and Reddit and tell you what tickers are mentioned the most. You get unlimited analyst ratings on any stock you're interested in. You'll see how many analysts have a buy, sell, or hold rating. You get a watch list every day the mods publish that tells you what they're looking at and how they plan on trading it. And then you get all the courses. The courses are a simplified yet expanded upon version I learned working at the fund in New York. There's beginner and advanced courses, options, swing trading, trader psychology, crypto, you name it, we've got it. It's all in text and video, whatever's easier for you to learn. There's no VIP courses. There's no extra courses that cost more money when you join. There are no upsells for courses or tools in True Trading Group. It's all included when you pay the $11.07. Then you also get the video library that has nearly 300 hours of workshops and webinars like how to grow a small account, how to resist FOMO, just to name a few. And you can actually attend all those workshops live when you guys become full-time members. It's time you invest in something real, guys. It's time you took advantage of the opportunities that are in front of you. Stop looking back and say, man, I wish. I wish I bought in 2020. Man, I wish I bought in 2008, 2009. Man, I wish. Stop wishing and start being thankful. But in order to be thankful, you've got to actually decide for yourself. The choice is up to you. I can't make it for you. All I can do is provide you the opportunity, back it up with a double your money back guarantee to hold us accountable and to protect you. But the decision is up to you. The ball is in your court. You have a choice to make. Either sit back, do nothing, watch your 401ks decrease and wait it out, or take control, identify the opportunities, look to add in your long-term portfolio in stocks that can build wealth for the long term, and learn how to actively trade the volatility that you have in the markets to make some extra cash that you can then stuff into the long-term portfolio. That's what we're doing. Question is that what you want to do? If not, then keep doing what you're doing. If you're ready to change, ttgoffer.com, TTG121 coupon code, price goes up at midnight tonight. Also, if you're still unsure about the platform, we've got a 7-day trial. It's totally free, no credit card required. You can check us out for full 7 trading days. Weekends do not count. So if you join today, you get 7 full trading days with us. Go to ttgthree.com. Again, that is ttgthree.com if you guys want to join our free 7-day trial. Thanks for joining us tonight, folks. Big shout out. Thank you, Mr. Matt Kohrs, for joining me. As always, a pleasure. Thank you, Chris G, TTG member, former market maker. Thank you for coming on here. Really appreciate you guys providing some insight, educating the TTG fam. I love it, as always. Guys, I will see you all in chat tomorrow. Have a great evening. Later.